Hey, welcome back to my channel here at LL Options. If you're new to my channel, please consider subscribing. Today's video is for beginner analyzation of certain stocks. Today we're going to be analyzing CSCO, Gold, VWO, and INTC. And we're going to be looking for the trend of a stock. We're going to be looking at candles near the SMA, simple moving average, and where it's best to enter a trade. We're going to be comparing the 30-minute time frame to the daily or the weekly time frame, and we're going to see two or more consecutive long candles. We're going to see what that means, which usually means there's a reverse coming in the form of a pullback, usually. So, again, let's begin with CSCO, Cisco Systems, and let's bring it up over here on the chart. All right, let's look at the last week. Well, let's look at the overall trend. So the overall trend is the stock is trending up. And let's look at the past few days. The past few days, Friday, the stock had it rallied up. It started at 41.65 and it rallied up to 42.62. So basically, it was in an uptrend. And let's go a little bit further back for a few days. The SMA, well, let's look at the 9 SMA, simple moving average, and see if we had anywhere that we could have placed a trade and then we would have made a profit, just knowing that we were placing a trade near the simple moving average, which is usually safer. Let's say placing a trade here is safer, and you have more of a sure bet of making a profit than placing a bet, let's say, when we get to, let's say the stock is up here and it's this far away from the moving average. So here's the moving average, and again, here's the moving average. So it's safer to place a bet near the moving average, because it means that it has time and it has space to move up and give you profit. Whereas if you place a trade when the stock has gotten all the way up here or up here, well, look at what happens. Look, okay? It's almost impossible to make a profit, because it's really going to go up any higher. I mean, it does happen, but you have more chances of placing a stock when you're of having a profit when you place a trade when the stock is closer to the simple moving average. So when you see that the stock moves up far from the moving average, it's best to wait till you see that it comes back down, like over here. Let's say you would have placed a trade when you was here, and then you see how it would have moved up. You would have made a profit, and it would have been, let's see, you would have gone from 41.05 one day, holding it overnight, and then ending up at 42.10. This trade would have opened up at 42.10 the next day. Okay, and that would have been a profit. But you would have made a larger profit if you would have, let's say, placed a trade down here where it's near the moving average, 38.90. Okay, and that would have been at the end of one day. Hold it overnight. The stock jumps up to 40.60 and then even continues to move to 41.36 at the end of that day. So it would have gone from here to here. Okay, so let's see. Let's look at the, let's see if we see any candlestick patterns. And the only one I see right now, I see this candle way above the MA. It got far away from the MA. Well, that usually means that it has to snap back to the MA. So, and it did. Excuse me. It went from 42.58 and it went down to 40.63. So that would have been a nice profit. Let's see where else it got away from the MA. Let's see right here. Okay, got a little bit. Let's see, two places. Over here, it went up to 40.51. And the color in the candle really doesn't matter when it gets that far away from the MA, because it's going to snap back eventually close to the MA. So it, again, 40.56, and it came down to the next day. It opened up at $38. So that would have been a nice profit there. Okay, now let's see what else. If we see any other, okay, maybe this one over here. So it's pretty far, relative to the other candles, it's pretty far away. And again, it moved up, it snapped back to the MA, past the MA, all the way up here the next day. So it went from 37.80 to 40.25. Okay, so let's see if we can look at this from a different time frame. We're looking at the 2-hour time frame. Let's look at the 30-minute time frame. And the difference between the time frames is that you get different information. The 2-hour time frame, you'll get less information, and it usually, the candle looks, or the stock looks like it's moving at a steadier pace or a slower pace. You get less information. But when you look at the 30-minute time frame, you get much more candles, you get much more information, you see much more movement. That may be a good thing, that may be a bad thing. It depends on how you trade. It depends, you know, which structure you prefer, what you prefer to trade with. Some people like to see a lot of information. Some people don't, because some people feel it's more confusing for them. All right, so over here we see the stock opened with a gap. It gapped down from one day to the next, and it gapped down with large red candles. 4 consecutive red candles. And normally, and the trade is going up. The trend is going up. I mean, normally what that means is, oh, let's look at another thing. It's also like trend, like a little bit of trend here. Horizontal trading. It's not really moving much, but normally what that means is when you see large consecutive candles coming down, that normally means the stock is about to reverse or pull back. So in this instance, it's really pulling back because the trend is up. Okay, so it actually pulled down. The pullback was to this downside with large red candles. And then when you start seeing the green candles, or eventually you'll start seeing green candles, that means it's going to continue on the way up. So here we go. So if you would have held on to that, it would have gone from 40.58 about to 42.52 in 2 days. So from the 21st of April to the 23rd, and you didn't even have to hold on to it that long to make a profit. You could have made a profit if you would have held on to it from the 21st to the 22nd. So it would have gone from here to here. So that would have been 40.61 to 41.66, which is a whole point and a little bit more, and it still would have been a profit. All right, so let's go to gold, GOLD. Okay, let me bring it up here on the charts, and let's see what it was doing. Okay, I noticed there are a lot of long tails. So there was a lot of pull between the bulls and the bears. Okay, it was bullish, it was bearish. So that's what the long tails usually mean. So but the winner is usually the full body color of the candle. So let's see what we have here. The trend was going up. Let's see right here. The trend is going up, and it gets away from you a little bit. It gets away from the SMA, from the moving average over here. So that usually means it's going to snap back to the moving average. So that would have been a nice day trade. Let's see. Yes. So it would have gone from 1712 to 1728. Also, we have what is called an engulfing candle, which is a bullish pattern for a candle. And what that normally means is that you have one red candle, and the body of the green candle coming up next it's longer or fuller than the previous candle. So that usually is a signal that the stock is going to be moving up. Okay, let's see what else we have here. So over here we have a little bit of, not much change, but a little bit of range trading, it looks like. We also have a candle here. It's a red candle with a long tail. That usually means that the stock is going to be moving down. Let's see what else we have. All right. Also, again, we have large red candles. And again, that's a symbol that, or a signal that the stock is going to be moving up. All right, let's see what else we have. Okay, over here it seems to get away from a little bit far away from the moving average, which is the blue line. So let's look at the maybe we can get more information from the 2-hour candle. Okay, in the 2-hour candle, I noticed let me change my thing here. I noticed we have more of a step movement in the beginning of April. It's moving like this, like a step formation. Over here we see it for 2 days, a little bit more than that. It went up steadily, and the green candles were dominant, so the bullish were dominant for 3 days. All right, again we have 2 large red candles. When you have 2 or more large red candles, it usually means, or is a strong signal that that stock is going to be moving up soon. And the large red candles or green candles, whichever one you're looking at, it's usually relative to the previous candles in the chart. So if they're larger, 2 or 3 times the size or more, then that's a signal that the stock is going to be going in the opposite direction. All right, over here we have the red candle being engulfed by the green candle. So usually that means it's going to be a trend. The stock is going to be going down. the trend is changing for a while there, and it's actually a pullback because the trend is up. Okay, again, large red candles. Then we have a little bit of a range, large red candles, and a little bit of a range movement. Not really going much anywhere. Again, the stock got away from us a little bit over here. Okay, we have a little hammer candle there. And again, usually symbolizes that the stock is going to be moving up. Okay, let's see. What else do we have? All right, let's look at, well, so basically this trend is going up. Okay, let's look at another chart. Let's look at VWO, and that's Vanguard International. No, actually, what's VWO? That's not VWO. Okay, let's pull it up in the charts. VWO. Okay, yes it is. It's Vanguard International Equity Index Fund. And let's see what it's doing. All right. Not really moving much in any one direction, but I do see that it seems to be narrowing. Let me see if there's any earnings. No, there's no earnings coming up from what I can see. But if you look, you've got, okay, let's connect some of these. Seems to be narrowing. All right, and usually that means it's going to break out either to the top or down. That's why I moved the chart to see if there's any earnings coming up, because that's usually when stocks break out. But I don't see any earnings coming up, so it's not that. But anyway, the range is going up. Actually, the range is kind of flat. It's kind of flat, yes. But it's hard to see, you know. Well, let's look at this. What was going on down here? Over here, it was trending down. So the movement was going down. And again, if you look, if you're interested in placing a trade on a stock that's going down, if you look at the candles that are closest, look where it is closest to the simple moving average, and I'm using the blue line, which is a 9 moving average. It's best to place a trade when your candle is closest, or your stock is closest to that SMA, because what happens is, let's say you want to hold it overnight, you're more likely to have a move going down. Okay, and that was at the end of the day. But let's say that you have you don't want to hold your trade overnight. Let's go from the 2-hour chart. Let's go to the 30-minute time frame, and let's go back to where it was trending down. Okay, let's move this. Let's go back. All right, let's over here. All right, so this is the 30-minute time frame. You usually get a little bit more information, and it gives you a little bit more precise timing as to where to enter a trade. So let's say you don't want to enter at the end of the day because you're not interested in holding a stock overnight, because a lot of people are afraid that the stock is going to gap, you know, against their favor. So, like if they think the stock is moving down, and instead in the morning they find out the stock gapped up. Okay, and they lose a lot of money that way. So what we do is, again, we look to see where the stock is near the simple moving average, closest to it during the day. during the early part of the day. So like that, we don't have to hold on to this overnight. So, and we like, oh, and another thing is we want to make sure the stock is either moving flat or in a curve going this way. Okay, we don't want to get into a trade when the stock is moving, let's do it over here, this way. We don't want to do that. Okay, so you don't want it going from down and then coming around that curve. You don't want to enter a trade there for a downtrend. You want to enter it when the stock is moving up, it's on the way up, it's curving, and then it's coming down. Okay, so you want to enter a trade inside of that curve. Okay, and close to the SMA. So let's say that we enter a trade here at 38.02, and that's, let's see, that'll be at around 10 in the morning, and then we wait a little bit until around 2 o'clock in the afternoon, 3 o'clock in the afternoon, and then we remove the trade at 37.28. So we went from, let's see, let's go back, 38 to 37.21. Okay, so that's about 80 points, and you should have been able to make a nice profit on that. Take your profits off the table, you continue to trade another day. And this is a good way for people who don't want to hold stocks overnight because they're afraid of gaps, and that the gaps might wipe out their account or the trade for that day. You need more information. Okay, we're over here at March 11. You need more information in that. You want to get a little bit more specific detail when to enter a trade, then you can go to the 15 or the 5-minute chart. I don't like the 5-minute chart because it's way too many candlesticks. And it's like stressful to be looking at all of these sticks. It's too much for me. So I'd rather the 15-minute one is okay. Like over here, let's say April 7, you see, you look at this, it's trending up, and what you're looking at the shape of the 9MA, and it's going from up and curving down. That's the best time to enter your trade. It's not good to enter from, let me get rid of this. Let's see if I can move this. It's not good to enter when your stock is curving, let's say over here, like over here. This is not a good place to enter stock. A trade, that's not a good place, because you're obviously, the trade is moving up. The moving indicator is telling you, signaling to you, hey, I'm going back up. You want it to be telling you, hey, I'm going down. So you want to see this curve coming down, and you're gonna look in here. Let's see, here we go. A safe place to enter would be rather when it's either flat on top, forming its curve, right here, 34.97, and get out at 34.43. 34.97, 34.43. 1 o'clock in the afternoon, 3:15 in the afternoon. Okay, to me, that's a very, nothing is perfect, nothing is guaranteed, but it's a safer bet to me. Okay, so that's it for now. Thank you for visiting my channel. Let everyone know what we're doing here at LR Options. Please remember to comment, like, share, and subscribe if you haven't already done so. Bye-bye.